Hi, my name is Oliver. I'm co-founder and CEO of Basenode, and I'm very happy that we are having this panel discussion today surrounding the topic of stablecoins. Before we introduce our panelists and before we start discussing, I would like to introduce myself a little bit and also how we came to the idea of having this panel. The idea for my startup Basenode came across when we tried paying freelancers that were in other parts of the world, so cross-border payments. Our current banking system is probably not made for all these payments being done on a broad scale from the emerging economy. And we then realized that this is a real issue to so many people. Stablecoins and crypto tokens can be used to transfer money within minutes for a fraction of a cent through the blockchain networks that we have built. And this might change the way that we collaborate on a global scale. This is something that we want to discuss today. My startup Basenode is providing crypto invoicing and accounting. So if someone wants to receive his or her salary in the form of crypto tokens or stable coins, then Basenode is a software that enables this for freelancers and small enterprises. Okay, but now enough about me. I would like to introduce you to our panelists, and I would say we start with Modupe. Maybe you can tell us a little bit about yourself and what you're doing.
Hello, everyone. So my name is Modupe. I am the co-founder of a Web3 startup. So we're called Ecolance, and we're a training and a recruitment platform, and we're focused on countries from the emerging countries. And so what we do is train them and then connect them to employers globally. So we're actually dealing with this situation right now where we need to think about how they're paid and they can receive their payments. Also, across Africa, I have several other efforts that help more women and people to work in blockchain.
Hi,
Very
everybody.
nice. I think, Sarah, you can continue. Oh, Brian, yeah. Let's go. Brian, you can.
Hi, everybody. I'm Brian Becerra. I'm part of Being Crypto, lately a fellow on the Digital Association. And I have some experience developing some payment gateway with crypto. And glad to be here to contribute with the education of crypto.
Thank you. And now, Sarah.
Yeah, I was just waiting for it to be my turn now then. I'm Sarah Palerovich. I'm an executive director at the Digital Euro Association, and we at the DIA are, of course, always up to talk all things stablecoins and CBDC related. This is what we do on a daily basis, monitor the developments and stablecoins actually being used, because there's oftentimes a lot of talk about the future of payments. I think this is something, and Oliver, Modupe, Brian, you can all agree here. I think that this is actually something we can see today, not just stablecoins, but more broadly speaking, crypto payments in general. So very delighted to be here and hear about the firsthand experiences from you guys, especially.
Yeah, this is a very nice panel that we have here. People from 3 continents coming together to discuss borderless payments. I mean, that's really something. So first, we want to dive in this topic. Maybe I can tell a little story how we got into it. So why would anyone want to receive their salary in crypto, or more specifically in stable coins? For us at Basenode, we are paying some of our employees already in stable coins. We're using our own software for that. And we interviewed these employees lately. There was an article in Forbes that was telling the story of one of those developers that is getting paid in stablecoins. And he described that he can even pay his rent in his home country, Nigeria, with the help of these stablecoins. If he cannot buy something directly with the stablecoins, then he will use just the gift cards, or he will exchange these stablecoins, these virtual dollars, into the currency of his country, but he will only do so if it's really necessary. The reason might be high inflation in your local national currency, or lacking banking infrastructure. So what are your thoughts about this? And to come back to the question, why would anyone want to receive his or her salary in the form of crypto or in stable coins? Maybe Sarah, can you open the discussion.
Yeah, I think the first thing I'd actually like to touch on here is the worker that you're talking about from Nigeria, because there we also have a CBDC launch in that country, which is quite interesting. And I'm not sure about the inflation rate in Nigeria right now, but in Venezuela, for example, we know since the 1970s, it's been somewhere around 3,700%, if I'm not mistaken. Nigeria must be a bit less here, but this really goes to show kind of what that means in terms of paying your rent in the e-naira or the naira, if I'm not mistaken. That must be the currency then, if the CBDC is called e-naira. So that's certainly very, very interesting to me, coming from, as you said, Europe here. I think for some people, the aspects why you would choose a crypto salary might be different from others, of course. And Modupe and Brian, you will comment on this, but certainly transfers can be more efficient and cost effective since you're cutting out the intermediary financial institution. It could be an investment with the potential for upside, possibly not right now in the current market. If we would have had this talk a year ago, things might look a bit different. Then for tax reasons, for example, that could be another reason, could make sense depending on whether it's seen as property or tax, for example, in the US under federal income tax, or treated differently. That could bring a positive aspect to it. Then, of course, also you're voting with your wallet in a way when you have an emotional and political aspect in there. Almost doesn't seem to be that case with the person you're paying per se, but this could be a reason. And then also if you're being paid in stablecoins, that can facilitate the track to converting it into crypto faster, of course, as well.
Yeah, wow, you touched a lot of subjects there, even taxation and all that. So I just looked it up. The official inflation rate in Nigeria is about 20%. And that's, a lot higher than here in Germany, for example, where I'm sitting. But so maybe these stable coins, I mean, they're mostly denominated in dollars or euros, so pretty strong currencies. Maybe they're giving the people the chance to actually accumulate wealth that will not be inflated away so fast by the local government. But let's hear what Modupe has to say to this. Maybe you can share some experience.
Yeah, I can think of two major reasons why I would choose my salaries in cryptos. Number one, the fees. So there's a lot of fees to pay when you use the traditional banking systems. You have to pay corresponding bank fees. You have to pay, you have to think about FX costs. You have to think about the fees for a particular scheme. Okay, so there's a scheme called like the mobile money. And if you want to use the mobile money to receive your payments, apart from paying all these other fees, the scheme itself has a fee attached to it. For the corresponding banks, you have to think about legal fees, you have to think about regulatory costs, compliance costs. There's so many fees to pay in between. And I remember once when I had to make a $50 payment, literally my charges were a little over $50 just to make a $50 payment. So 50, you see, this is one of the reasons why I would choose crypto salaries. They're cheaper, they're faster, which takes me to time. The second reason why I would choose crypto salaries, because then you also have to think about the time to fulfill all the regulatory requirements between the different jurisdictions. So I want to send money to someone in Ghana, which is still within Africa. And I have to think about, their own regulatory processes. The processes within the banks are not fully harmonized. The payment is slow. It could take 2 days. The fastest you could get is maybe 24 hours. And we all know that that's not the same with cryptos. So these are two different reasons, first, why I'll choose crypto salaries.
Yeah, very, very good insights. So your argument is basically that it's much cheaper and faster, which is probably true in most cases, in my experience. But maybe Brian, you have also some experience with crypto salaries, I understood. What's your opinion about it?
Yeah, well, I think we are made to move like nomads, digital nomads. So for me, I have been in Panama some months ago, and I will move to Colombia in 1 month. And will be a problem if I'm attached to some currency, because there's some different jurisdictions, as Molupe well said. So receive like a stable coin for me is just have my own wallet and no dependence of where am I. Maybe if you think about taxes, you can define, well, I'm resident of that country, so my taxes must go to that country. But there's a gray zone on South America, at least, that it's not defined how you will tax your stable coins. And also depends of what is your work. You could be trader, you could be just journalist, and you could be paid with something specific. So stable coins for me is like the best opportunity to not depend from the faults of my own country, because as you say, the inflation on my country is at least 5%, close to 6%, and is estimated to end the year with 10%, almost 2x on inflation, and that will be a big dump on my salary if you think in national currency. So get stable coins for me makes me also responsible of how my finances will go, because I can also trade or swap this maybe dollar to euro or maybe to yuan or some other digital currency that will give me not only my full salary, but also inclusive a profit. So that's the opportunity for me that stablecoins give us, not only faster and cheaper, but also the opportunity to not to get a benefit from the inflation if you are well trained. So it's pretty awesome, and you can also develop your business, because as startups like BaseNote we have here, you cannot depend from the workers on your country, so you can give work to some other countries. I have been working with a Chilean friend and also with some Colombian, Spanish friend, and we made some project, and all the salaries was with crypto, and there was no problem for it. So yeah, it's pretty awesome, the gateway of opportunities that this technology bring us.
Brian, I'd like to just comment on something that you said. I found that so interesting, because from my perspective, if you say actually being paid in stable coins is protecting me from the inflation of the country that I'm currently in, to my ears, of course, that sounds very different, because I'm not currently getting paid in crypto nor stable coins. And I mean, we see the inflation in the Eurozone somewhere around, what was it, 8% now, if I'm not mistaken, meaning that if I were paid in stable coins, it would be kind of the same house built on sand that I would be paid in right now as if I were just getting paid in euros. But of course, if inflation is much higher than this, and you see a foreign currency, say the US dollar, as you say, as the more secure safe haven, then from your perspective, that of course makes much more sense, and it's actually a way for you to preserve your wealth. So I just found that mind-boggling how different the perspectives can be on this.
Yeah, and definitely. And also, if you are like attending all the news that come, it's like I changed my stable coins to yuan in some point of the history, and that gave me a big opportunity, like my salary growth without they give me more money. So make that swap easy in the digital technology is a new opportunity also, because if I do that in person, I will get a lot less money. I will also maybe not trust the people that is giving me that currency, because there are not a lot of currencies in the different countries. It's like in my country, you can't find the money of Nigeria for say something, but in digital world, you can find all the currencies. And that is also an opportunity. If the more you study of different currencies, the more opportunities you get with stablecoins.
Yeah, quite some good insights. So I was wondering, because someone in the chat just wrote, the value of local currency is losing its value rapidly, hence to populace opting for stable coins and US dollar stable coins especially. So if I look at CoinMarketCap and I look at the top cryptocurrencies, I see that there are some very large companies that offer US dollar stable coins. And will this maybe lead to an even faster dollarization, because local currencies are just not used anymore, except for yeah, when it's really absolutely necessary. And yeah, this is something maybe to think about. And so this is maybe something that goes out to Sarah again, because the Digital Euro Association is, I think, also of course working on a euro stablecoin. Maybe you have some insights there, or what is your opinion about stablecoins also driving dollarization, because the dollar is just the king of fiat, right? And everyone wants it.
Well, the question is to kind of turn it around. Is the lack of a euro stablecoin the reason for the US dollarization? Because there's more US dollar stablecoins, or is it really MiCA driving the dollarization forward, right? Mm-hmm. Because what we do see is, of course, that there is euro stablecoins. However, they don't have a huge market cap for different reasons. I mean, one of them is Circle's Europe, for example, that has one of the higher market shares when it comes to euro stablecoins, is actually, as of right now, probably not MiCA compliant in terms of the euro being issued as a money token from a private entity company. Thus, it needs to be regulated under MiCA. And there's actually a lot of strict compliances that they have to still look into when it comes into power within the next couple of months and years. And then the stablecoins that we do have within the Eurozone just don't have very high adoption, because regulation and MiCA is obviously hindering that from happening on a broader scale. So I would definitely say that this is contributing towards the dollarization of the stablecoin space, and essentially, in my opinion, also hurting the Eurozone and falling behind on this, and keeps it from becoming the new reserve currency when it comes to, or within the stablecoin space. That's my take on it. Interested to hearing what you guys think about it.
Mm-hmm. Yeah, very interesting. It seems like Europe is falling behind once again a little bit due to high regulations. But I mean, there are advantages and disadvantages to regulations. But I hope we are not missing the train here. Modupe, do you think so? You have experienced getting paid in crypto, and especially in stablecoins, and you are also educating people around the topic. What are the things that you should keep in mind when choosing which token you are getting paid in? Like when I'm thinking of, for example, Terra Luna, there was also, they had their own stablecoin and it just crashed. So how can I be sure that I'm like not taking too much risk by getting paid in stablecoins? So how do you educate people around this topic?
Okay, so what we do, normally we would ask which coins they prefer. So we don't make the recommendations on which they use. So they would tell you which they prefer, obviously, just so that they have like full responsibility for what they've chosen, whichever stable coin they've chosen to use. But with the situation around the Terra Luna, I personally never used it before, but mostly used the USDC and the USDT. And that has been most of my experience working with people. So making the decision has never been forcing people to use any particular one. So we ask them, and then they make the decision on whichever one they want, and hoping that they've done their research and they make their decisions, and then we pay them in using the particular stable coin that they've chosen. And that's how it's worked so far. Also, I think there's that it has more acceptance, like the USDC, the USDT, they're the most common ones, in my opinion. They're the most common ones, and most people use these ones anyway. So yeah, these are the ones that we've used most often.
Mm-hmm. Yeah, thank you for those insights. We had another message in the chat which says the inflation in Ghana is currently over 33%, and sourcing physical hard currencies is getting difficult because of scarcity. There's huge demand for stable to save the value of their savings. Are we maybe letting people behind that are not really techies, that are not so savvy how to use a blockchain? I mean, using a wallet and holding your own coins is also a big responsibility, as we just realized. I mean, you have to pick which stablecoin you think is secure, and it's your own responsibility to hold your keys and so on. How can we So what needs to happen that we see a broader adoption of stablecoins? Yeah, maybe who wants to take this on?
Yeah, I'd like to say something on this as well.
Yeah.
I think one of the problems that we have in a country like mine, in Nigeria, there is a very high adoption for the use of cryptos. And that is because people are always looking for simpler ways to make payments, easier ways to receive payments. So thinking about leaving people who are non-tech behind, there's a lot of structure to study. So what people don't know about is blockchain, which is the technology behind the cryptos. But for most, a lot of people know about cryptos, how to use them. I would say right now, at least 10 to 15% of the population in Nigeria have wallets, and they know how to trade in crypto. They receive crypto, they send money to different countries, or receive money using cryptos. And it happens like that as well. So I think that one of the problems that we have is acceptance. So people think there's legal uncertainty, regulatory uncertainty. Most times the cryptos are associated with scams, so these are challenges that we've been dealing with. So when people hear about the scams, it's now a bit difficult to convince them that the blockchain is safe. So yeah, these are the challenges we deal with. But more often than not, the average person on the street in my country, Nigeria, has heard about Bitcoin, at least.
That's in a stark contrast to Germany. If I go down here on the streets in Berlin, I would say 85% have never heard of it or think it's a scam. I really like the aspect that Brian brought into the discussion earlier about being more mobile on a global scale, being more like a digital nomad and not being dependent on one jurisdiction to live in, and easily take your wealth in your phone and just leave the country if you see fit. Maybe, Brian, you can walk us through this process, because I'm really curious, how does it work? Let's say you move to another country, you have your wallet. How do you buy things? Do you have like a crypto credit card, or do you exchange it into the local currency? Maybe you can walk us through this a little bit.
Yeah, for sure. Well, was really interesting, the insights of Morube. I wanted to add also that the lack of adoption of stablecoins, at least in my country, to give you more perspective before we enter to this new part, is because there is no institutional reserve that backs this new technology. Also, our institution, the banks of Peru, they not trust because the cases like Luna, but also they understand that the technology is making a gap that they need to close. And this gap is following by the CBDCs, at least. They are betting for CBDCs beside the stablecoins, but they understand that the stablecoins are growing like faster than anything that we see before. So in my country, they want this UX experience easy. There's an app called Valora from Cello that you can send money just with the number of the phone, and that's all. You don't need even to understand what is crypto or what you need wallet. That's a first step that is working here. There are some Cello ambassadors in my country that they are making this adoption more easy. That will be maybe some example of how you can drive better adoption. Now, going to your question, thanks for it. It's pretty interesting. I managed to move from some different countries after study a lot, like this new technology like Tower Bank that gives you a debit card that is funded by your wallet, your crypto wallet, and how they make sure that it's not like maybe some wash trading money or something that needs to be regulated. They use KYC also, but you can make like a document where you say where the money comes, like a traditional finance, but they use the technology as an advantage. So that's it. It's like no, you are not separating the the two sides of the world. It's like traditional finance with this new kind of finance that it's making this traditional finance evolve. So with this technology and all the partnerships they make on the financial system, it's like a simple bank that is connected with Visa gives you the opportunity to go anywhere that has Visa. So it's like no a new something. It's just use the old connections, but with this new technology. Simple as that. So I'm able like to move. Right now I'm in Peru, but I will be in Colombia, and all my salary comes from crypto, by the way. And I can buy things with crypto with some friends also, like peer-to-peer. You must be connected with all the communities on crypto. Yeah, that's a fact, honestly. But also there are some new business like Crypto Avisos is an Argentinian business led by Crypto Chica, that is a well-known representative of crypto in Latin America. And she made her startup that you can buy and sell anything with crypto. Also, I would like to mention, maybe not a stable coin, but it's called Motif, an ONG that receives Bitcoin, and they make a new pattern of money. If you think that as a stable coin, it works like the same. They buy and sell everything from the whole circle of economy. It's like the guys who gives you all this, the storage or whatever they need for the business, they receive crypto also. It's like from Bitcoin to Bitcoin or from stable to stable. So you feel all the circle. It's not like need to swap to other currency. Those little experiments, at least in my country, are making evolve the adoption. And also in some different countries, when you connect with the different communities, you can even pay Airbnb because they understood the technology. So they knew the value, like maybe $100 to 100 USDT, USDC, or any stablecoin. So that's how it works, at least for me right now. But if you use these debit cards like from Tower Bank, you can make it without say crypto. It just use your card and debits from your wallet or from your crypto wallet.
Quite interesting. I also tried a crypto credit card here in Germany from crypto.com, and you basically exchange the token in the moment of payment. So you're holding, for example, dollar stable coins, but in the moment you pay it, then it's exchanged into whatever euros or local currency that you want to pay. And this is quite interesting. So I just read in the chat that in Africa, 40% of all transactions are still settled in the SWIFT system. So it's a US-based system. And this, of course, for once, gives the US more power over the payments, even on another continent. And it also drives up remittance fees. You were also mentioning CBDCs. I think, so Sarah, maybe you can tell us a little bit about what is your opinion about CBDCs? Are they the better stable coins in a way, or why do we even need them if we have Tether or US dollar coin?
Well, the reason is, of course, because the central bank doesn't want to lose what they consider financial stability of their country, right, which is their task. So if they wouldn't launch a CBDC, I think there would be reason to worry on a certain scale, because then there's viably no competition in the market that could possibly take over. The question whether CBDCs are the better stablecoins is a very rough one. That I don't think you can answer for each country. There's no one size fits all answer here. If we go back to asking that question to Brian, for example, I'm sure he would have a very different opinion on this, potentially because of lack of trust in government, I could imagine. Brian, correct me if you're wrong. So this could be a big aspect, for example.
Yeah, as she said, it depends of the policies and the economy of your country. That's also a base how develop CBDC. Also, my country say that they are developing CBDC. and they are learning from India and China. So that will take time. But I really think that CBDC is learning from the use cases of stablecoins, because not even the lawyers know how to tax or regulate the stablecoin, especially in Latin America. It's like a gray zone where the innovation is growing faster as nothing else seen before. So from those use cases, all the developers of CBDCs are learning like how improve in those gray parts, or in those parts that it's difficult to go deep. All right. So for me, like the synthetic CBDCs, if I'm maybe going too deep on this, will be amazing, because they will eliminate the credit. So that will maybe make a stronger economy, at least on my country, from my side. All right. So I think that will be a big opportunity on my country to improve on their own economy. But from
That's basically
stablecoins,
thrown both together, right? I mean,
yeah,
thrown in stablecoins with CBDC is having a hybrid solution right there. And I agree. I would definitely say that that's got some upward potential in certain countries. The question is also about the backing, right? So if you say something's central bank money backed versus it has to be backed by some other structure of backing, for example, the USDC right now is backed with US Treasury bonds and cash reserves, whereas a lot of the Euro stable coins we actually see are Euro backed, because right now it's actually economical to uphold such a backing of that structure, that if I'm not mistaken is also required under MiCA to be highly cash backed. Then depending on how much you trust in cash, stablecoin could be the better choice over CBDC. Again, how much trust you place in the currency.
Yeah, good insights. I think the huge selling point of CBDCs, and maybe correct me if I'm wrong, but I think the huge selling point is that you basically have very minimized counterparty risk, because the central bank is basically your creditor in that sense, in contrast to, I don't know, the Tether Corporation or some entity that is private and that you need to trust, right? So there's a big difference, right?
There is, and there's a difference, I guess, if you look at Russia, for example, now, whether it's the central bank blocking operations in the RTGS system, so the real-time settlement gross system, or whether it's a private entity company saying we're banning certain addresses coming from certain places. So I guess it also depends on the political situation that you're in, whether you're going to go the CBDC route or the stablecoin route, depending on which path you can actually still take. So it's a really tough question to answer, I would say.
Mm-hmm. Yeah, quite interesting. I have another question from the audience for you, Sarah. The question is, should CBDCs be available on decentralized exchanges? And as far as I understood, CBDCs need to be in their own network. So if I look at some stable coins like Tether, they are available on Ethereum, on Polygon, Binance Chain, you name it, right? All these networks. But central bank digital currencies need to be more controlled, right? So yeah. Can they participate actually in decentralized exchanges or in DeFi in general? Is that even possible then?
As a disclaimer, I'm not the person that's going to be able to tell you all about it, but from what I understand, basically, Oliver, it's right what you say, that there either needs to be some type of bridge. So either the central bank needs to enable the interoperability, but this is, of course, already a problem, because even stable coins in one system are different from stable coins on another system. So even though they're issued by the same entity, they're using different blockchains. They're not interoperable. And the same will be true for central bank digital currencies. I mean, some countries, as Brian actually said, they're quite inclined to DeFi, some are not at all. So therefore, you won't even be able to say that if a commercial bank issues a central bank digital currency with another, that this is going to be interoperable. So this will be quite a mess, to put it mildly. So in some way, you will have to have a representation, something like a derivative in DeFi in order to put it on exchanges. Again, with the disclaimer that I'm open for corrections. I stand to be corrected by the audience or by you guys if you have anything to say about it.
Yeah, maybe
Sure.
I could add some information to it about the CBDCs. Well, there's some different kind of CBDCs like retail and wholesale. And this retail could also consider not just the customers, but business to business. In that side of this business case, we will say that in a future could be possible that those CBDCs go to some exchange, but that will need, also that will be necessary to give some clear regulations. So maybe not now, but in the future could be possible. At least how I see, according the BIS, the Bank International of Settlements say. So yeah, could be possible because they don't want to be just the only one type of money. They want everything going all like as free market, and that's how they are learning to improve on this new kind of money.
Yeah, quite interesting. We have one of our viewers who commented that he recently participated in a hackathon organized by the Central Bank of Nigeria, developing the e-Naira. And yeah, Modupe, you are very close to people who are actually using stable coins and maybe even CBDCs in the future to receive their salary. Do you think there is, so let me provoke you a little bit. Do you think there's even a need for e-Naira? Like, who would prefer to hold the e-Naira against, let's say, a dollar stable coin? Is that even a use case? Maybe you can explain a little bit about that.
Okay, so first of all, I think that person who participated in the hackathon, at least there's one of our students from Ecolans who participated and won the hackathon. So he's probably the one. I hope he is. So, but apart from that, the e-Naira, one of the reasons I was really excited about it when it was about to be launched was, and I actually wrote an article about this, like Nigeria from cryptocurrency ban to CBDC creation in 9 months. And I thought this was incredible. And I thought this would increase the adoption of the use of cryptocurrencies and digital currencies, but that did not really happen. So do we really need an e-Naira? This is a country of nearly 200 million people. And adoption, use of the e-Naira is still less than, I don't know, maybe 5% of the population. So even the people who use cryptocurrencies do not use the e-Naira. And the reason is it's still pegged to the Naira that is prone to inflation. So at the moment, it's still a poor store of value. We still can't do much with it. And I know one of the things that happened, Sarah was talking about derivatives. So something that happened was one of the leaders of the first blockchain hub in Nigeria went ahead and wrapped the e-Naira. And I thought this was an interesting move because wrapping the e-Naira would give an opportunity for the wrapped e-Naira to be listed on exchanges, and then people can actually trade between different countries and the Naira and the e-Naira. So I thought this would also, increase adoption, but there's still some regulatory issues to put in place before that goes mainstream. But yeah, do we really need the e-Naira? Everyone is still disrupting the payment system without the e-Naira at the moment. So yeah.
Anyone wants to comment on that?
Yeah, I would like to add something. That was really interesting because it's kind of the same insight from my country. All the crypto people will not use some stable from my own country because they know some better options for say something. But for the people that it's not crypto related, I think it's the best option. It's like if I say to my mom, hey, you will use this, that it's pretty easy. It's like you use just a digital app to pay something. If we not talk about crypto, sometimes this way to communicate the technology makes this trouble or this wall, because it's a wall of knowledge. The people that it's not in this world think that, oh, I have to understand about exchanges, wallets and everything. But sometimes you just have to scan the QR and pay. That's all. That's all they need to know sometimes. I think the biggest problem on this adoption is the UX and education. And I will put UX as first, because when we use internet, we use without even know how some webs work. And that's at least from countries like Morupe and my country have the same insight. But also the adoption of stablecoins makes grow faster the economy. If you see Brazil, the Real Brazil, they were able even to pump some different projects without use USDT or USDC. So there was a big volume trading from Brazil and their own currency moving the markets. That was crazy. I also saw the same with Nigeria in Binance like some months or maybe a year ago. So that will give us like new data or new insights of how our countries are involved to this new technology. I think, yeah, own stablecoins are an opportunity, but it depends on the policies and the economy and the trust. But yeah, it gives new door for people that is new on this technology, especially the ones that are not involved, because they trust more on their own fiat or currency than crypto, because the cases of Luna and all these things we are looking.
Yeah, it's basically a trade-off, right? I mean, you can either hold the local CBDC that will have a certain inflation, maybe 20-30%, or you choose a stable coin that is a private company, but it's a US dollar with a very low inflation for fiat money. But then you are basically exposed to the risks of this company going bankrupt or becoming insolvent. So it's always a trade-off, right? We are reading here in the chat that I like this topic going a little bit more in the CBDC direction. I think it's very related to stablecoins. So let's have one more question into that direction too. Someone in the chat wrote that Binance and other big exchanges will probably allow people to buy crypto using CBDCs on their platform instead of regular bank transactions, and this will drive CBDC adoption forward. So we have these industry leaders, these big exchanges, and I mean, if they drive the adoption, then basically it will, people will use whatever is most convenient, right? Maybe someone wants to comment on that message from the chat.
Yeah, that would be very helpful for us in Nigeria, I would say, because that is the only way people would use more of the CBDCs. And that's because at the moment, we trade on the exchanges using a peer-to-peer system. So that's the only way we can receive our payments in fiat currencies in our own accounts, because we use a peer-to-peer system. So if there's the CBDC is incorporated in the exchange, it definitely will make it easier. It will increase the adoption, and the trade will be faster. We use more CBDCs in Nigeria, at least I know.
Yeah, I also think it's an interesting development there. I wasn't aware. Now the question is, of course, will the adoption of Binance cause the biggest shift here? I doubt it for once, but this is, of course, just symptomatic for what will happen in the future. I mean, if Binance is the first one to offer CBDC payments, then of course others will follow. I'm sure that's just how it goes here. And as this field is becoming more agnostic, the only question is really, is it easier for the user to then pay in CBDC depending on whether they have already, CBDC basically in their wallet, or will it rather be the stablecoin that they have, because all of a sudden they start being paid in stablecoins, or do they still have the, let's call it the normal currency, the one that they're used to? Coming back to the example of people's moms, right? First of all, possibly they wouldn't even be on Binance to begin with. But the question is, if it's as easy to convert from euro to a CBDC, then yes, I think this could actually foster adoption. If not, I think it's just adding another step of uncertainty. And if people, and I think this can't be said enough, we are in a bubble, and of course, people that are having an account with Binance, they are more inclined towards knowing about crypto and being informed, as Brian said. Education is still a big topic. And then this will make make a difference in the long run. I do think that. But with having everything on demand right now, when it comes to pay-per-use models, for example, or even being able to be paid for your working day after your working day, depending on how much you clocked, and this is certainly something that stablecoins would be. You can think of them as a way to making that happen, for example. So we think about work in general in a very different way. I don't see this type of innovation necessarily arriving with CBDCs because there's no businesses forming around CBDCs. Whereas with stablecoins, you can, of course, imagine all different kinds of new business models that come with it. So I think this new way of thinking would potentially still be better for people as compared to CBDCs, but still, of course, to come back to the Binance news, that's in the scope of what it stands for and the adoption. Really good news. On that note, it's also important to say that welfare of a country and the consideration how much adoption is actually needed or desired for financial stability to be reached for CBDC, first of all, depends on the country. It depends on level of unemployment, on a lot of factors, actually. And Modupo, of course, if you say 5%, I'm not sure that this is what your country is aiming for. It's probably a bit more. But let's say over adoption is also actually a dangerous thing, because then, since this is a pilot project, the question of the risk becoming too high is actually also rising, just to point that out too.
Great. There's something, you were talking about moms being able to use the CBDCs. I think that's one of the areas that the Nigerian e-Naira sort of covered. Hoping that we go through all the steps, because I know that there's supposed to be 4 levels of movement with the CBDCs. And at the moment, we have just started with the general adoption. But there's a point where even people in the markets are supposed to be able to use it. So the unbanked are supposed to be able to be onboarded on the CBDC platform and be able to use it. So even without a smartphone. Now there's a way we transfer money in Nigeria from bank to bank, and we have this the interbank settlement code that you could use on a phone that is not even smart. So with the CBDC, it's supposed to work that way as well to increase adoption. So regular people who don't even have smartphones should be able to use it. So hoping we get to that level with the adoption, because we're still moving along the steps at the moment. So hoping we get to that level, it will also help increase adoption when people get to, people everywhere can use it as well. And it's easy to use, as they currently also are able to access funds using this interbank settlement codes. So yeah, that's.
Yeah, I would like to add that this adoption of CBDCs maybe will come from the institutions, because the larger financial transfers are the ones that require most. And sometimes there's a liquidity crisis or liquidity problems that could be fixed with the CBDCs. So, and we go back, if we review our own conversation, that we are talking about CBDCs as dollar, if we look as a simple way. But the thing is, like, the technology of CBDC, of stablecoins, is like a pre-CBDC. And when this central bank comes as the support to secure that will not be a liquidity crisis or will not be a dip from the price of the own currencies, it's like the natural evolution of this kind of money, at least how I see. And I think this driver of CBDCs will be this technology. And Ripple is doing something pretty interesting as kind of CBDC, but with their own tokens. Just to explain something pretty fast, they give XRPs to institutions through exchange, and if the price goes down or maybe up, they just fix this volatility and adds whatever is required. If it's required less money or more money, just they fix it and you get whatever you send. it's like $1 million or $2 million. So they fix this liquidity because there is no CBDC at the moment. But when the CBDC comes, they will fix this, and Ripple will support this just as the infrastructure, you know. So what is coming with CBDCs is a more trust on central banks, because there is a part that is decentralized on the infrastructure, as we can say XRP Ledger, the blockchain that gives support with the all we understood about blockchain that fix this trust. They are taking it and putting in this new model of CBDC, and that's what is trying to do the stablecoins. And that's why the stablecoins are seeking for regulations. So when they have all these regulations and on different jurisdictions, the people will be more trust on these stablecoins. So we are on this kind of pilot, or this driving to make it a better technology, where we can trust at least at this moment. So what is happening is needed to understand how design the future of money.
Maybe Brian, we have a direct question to you. Do you think exchanges should be regulated like payment service providers and banks for customer deposit protection? So this is maybe related because you said, okay, you're also using exchanges or maybe crypto credit cards, which are often linked to fiat on-ramps and to exchanges. Do you think we need more customer protection there, more regulation? That's a question from the audience.
Yeah, definitely. I was trader before to go deep on knowledge. So I will say, as experienced trader, I'm able to watch some liquidity crisis and also some market manipulation. So when the institution is centralized, it always needs some regulations and protection for the customers. Maybe if it's decentralized, we will talk a different way to do it. No, but if we centralize it, we always come to this how is named, this one big risk factor. When something is corrupted, all the system goes down. So yeah, definitely we need some KYC, AML to make sure that the users are protected. To maybe some bot trading. We on Being Crypto always share this news, and sometimes they got hacked or some single point of failure. Thanks for pointing. That's the theory that all the crypto people, we have like over. It's in code we trust, because people always tend to be corrupted when it's centralized. So on exchange, the theory goes on that way. So definitely we need some help from institutions. And that's why we are running to spread knowledge for the institution join us to make the things work.
Okay, guys, I think we should wrap it up. We have about 6 or 7 minutes left here in the panel. And to finish it, I want to give every one of you the opportunity to answer some question that I will pose you. And let me draw you a little picture. So we were talking about CBDCs, we were talking about stablecoins, crypto payments. What are the risks associated with it? What are the advantages? And how is it maybe even liberating whole countries by being able to save again and not getting robbed by inflation? But let me draw you a picture. Let's say user adoption is driven mainly by UX and by the user experience. This is what we all agree on, I think. This is the mom argument. Let's say private companies are usually better in designing user experience through trial and error than central banks. So maybe we are heading towards a world where everything is paid in dollar stable coins. We have a maximum dollarization. Most of the local currencies are not used anymore, just for very short-term holding or transactions. And I want to ask every single one of you, give you like 1 or 2 minutes to answer. Is that a world that you think we're heading for? And maybe you can also tell us one major advantage that stablecoin payments bring to the people and one major risk in your opinion. I want Modupe to actually start with this, and then we just go through.
Okay, so Anta, is that a world that we're heading to? I think so, but I think that adoption is going to be slow across the different continents. So it will happen faster in some places and slower in some other places. But hopefully, eventually we'll get there. I think because the importance and the need for cross-border payments is now so important, and that waiting for traditional payment systems and their infrastructure is just not adequate anymore. So especially if you're going to do anything globally, we would have to get to that point. The second question was, sorry, say that again, please.
Yeah, so maybe you can, in your opinion, tell us one major advantage that stablecoin payments bring for people and one major risk in your eyes.
Okay, so one major benefit is for remote working, for instance, which is one thing I'm really focused on at the moment, helping people from all over the world work whenever they want to, wherever they want to, and earn in stable coins. So for me, that is a major reason, a major benefit to having stable coins and using stable coins. And the risk again is I'd just say like the same, the Terra Luna issue, because it's a private company. And if once something goes wrong, then it affects the entire system everywhere. So we just hope that doesn't happen.
Very good, yeah. Maybe, Brian, you want to go next?
Yeah. Well, I still think that the stablecoins not should be related just as to dollar. So if you think as a business developer and you want to start your startup or whatever, you probably will not pay in dollar. That's not what is supposed to be if you are in a country that is not dollarization. So I think that will be the first point to watch. On my country, at least, we have a new pen that it's a stablecoin with our own local currency. And we use in some bars to pay, maybe you can pay a burger or something, or beer. You are able to pay with this stablecoin. And for me, it's pretty useful because in this kind of things, I don't want to pay with dollars, the exchange rate of that makes you pay more. So for me, that will be a point. And also for the local banks, will be a point that you can't control anything and you can't know how maybe the inflation will go if you don't know the transactions. So this dollarization, it's a big risk if we talk about liquidity, because there's not enough liquidity in our countries that are not dollarized. It also gives too much power to USA to make whatever they want to make with their own policy currency, and we can do anything or give an opinion about it. So yeah, if we use stable coins, I will like add these kind of studies from the Digital Association that gives you proper guidelines to understand how is the best things to do. That will be a disclaimer. No? If you want to use stablecoins, go to these institutions and understand it well as a business developer. Yeah, that will be a point.
Thank you. And lastly, Sarah.
Yeah, thanks for the shout out, Brian, of course. First of all, well, the question, are we headed into that direction? I don't think the entire world is. I think that question is underestimating the power of, for example, China. What they're actually doing is pegging the yuan loosely to the US dollar, or to most of their export partners, actually. So what's happening is, if they export a good, then they're not really at a risk of realizing a loss necessarily if they do export their products, for example. And the same obviously goes in the digital realm. So they have been doing this for quite a while. They've managed it quite well. Will they stop in the digital realm? I do not think so. I think they will highly check on what will be tradable within China. And that is simply due to the political climate there and the Chinese firewall, as it's also referred to, for one. And this is just one example of how the dollarization of the world could be hampered a little bit. And another thing that's also, I think, important to note is that we, for example, are quite hesitant to have an over-dollarization as well. So to make a political statement, unless it becomes legal tender in the country to pay in US stablecoins everywhere, which I find very unlikely. I mean, I do not think that on a European level we will ever decide this. It's very unlikely, unless it comes from the bottom up, basically, that this will ever become a reality. Yeah, unless it becomes introduced and kind of is forced on people. But for example, for Brian, it would of course be nice to having to change from one currency to another when he moves to a different country to pick up work there. Those are my thoughts on what I find a very hard question, actually.
Yeah, the last question is always the hardest. And so maybe you can also share with us a major risk and a major opportunity of using stablecoins, in your opinion.
Major risk, I guess, for all those doing foreign exchange trading would, of course, be the loss of the diversity of currencies altogether in the world, and a benefit. It's actually hard to think about because I think about a lot of the risks associated with it.
Yeah, maybe there are so many benefits that it's really hard to pick one, right?
You know, okay, I'm gonna go with a very trivial one. If you're going on vacation, you're not necessarily going to have to get a credit card for it and pay for it because it's not accepted everywhere. You're just going to be able to pay with it everywhere. So the agnostic of having a one currency union around the world, basically, that would be nice from a user experience again. Nice,
very, very good. Thank you so much to all the panelists. We've reached the time. You can reach out to Modupe from Ecolands, Brian from Being Crypto, and Sarah from the Digital Euro Association. Thank you so much for being here. And if you want to try getting paid in stablecoins or other crypto tokens, you can check out basenote.io. It's a very nice invoicing tool and accounting tool. And yeah, I hope I see you all another time in the next panel, maybe. And I wish you all a nice day.
Thanks. It was a pleasure.